Hey there, fellow traders. Want an edge in the market? Of course you do. Who doesn't want to know what the smart money is doing? Well, I'm about to let you in on a little secret: the Commitment of Traders (COT) report. This isn't some boring old financial document. This is a treasure map pointing you towards potential profit opportunities in Forex and indices like the Dow, Nasdaq, and S&P 500. It's like having a sneak peek into the minds of the big players. You see, the COT report reveals the positions of major traders in different markets. Think of it like this: if you knew which way a herd of buffalo was about to stampede, wouldn't you want to get out of the way? Or better yet, join them? That's the power of the COT report. It's time to stop guessing and start trading with confidence. Let's dive in and unlock the secrets of this powerful tool. Okay, so what exactly is this magical COT report I keep raving about? You might have heard it mentioned in financial circles, but what does it really mean for you? In simple terms, it's a weekly report released by the U.S. Commodity Futures Trading Commission, CFTC. This report is a treasure trove of data for anyone interested in the financial markets. Don't let the name fool you. It covers more than just commodities. It includes a wide range of financial instruments. The COT report shows us the positions held by different groups of traders in various futures markets, including currencies, Forex, and indices. This means you get a comprehensive view of market activities. This is crucial information because it gives us insight into market sentiment and potential price movements. Understanding these trends can be a game changer for your trading strategy. Why should you care? Because this report tells you what the big boys are doing. Knowing their moves can give you a significant edge. We're talking about institutional investors, hedge funds, the real movers and shakers in the market. These entities have the power to influence market directions. They have deep pockets and access to the best information. Their actions can often signal major market shifts. By tracking their positions, we can get a sense of where the market might be headed. This can help you make more informed trading decisions. Think of it like this: if you see a bunch of billionaires buying up a particular stock, wouldn't you want to know why? Their actions can provide valuable clues. The COT report gives you that same kind of insight, but for entire markets. It's like having a window into the strategies of the most influential market players. Now, let's talk about how you can use COT data to your advantage in Forex and indices trading. Imagine being able to anticipate market moves in currencies like the euro, yen, or the British pound. Or how about getting a leg up on trading the S&P 500, Dow Jones, or Nasdaq? COT data can help you do just that. By analyzing the positions of different trader groups, you can identify potential trends and reversals. For example, if you see commercial traders heavily net short a currency pair, it could signal an upcoming decline. Indices work similarly. A large buildup of long positions by large speculators in the S&P 500 could indicate bullish sentiment and potential for further gains. Of course, it's not foolproof, but it's like having an extra set of eyes on the market. Remember, the COT report is a tool, and like any tool, it needs to be used correctly. But when combined with your other trading strategies and technical analysis, it can significantly enhance your decision-making process. Ready to get your hands dirty and start analyzing some COT data? Well, you're in the right place. Great. Let's fire up Excel and get this show on the road. It's going to be a fun and insightful journey. Don't worry, it's easier than you think. With a few simple steps, you'll be navigating through the data like a pro. Step 1. Visit the CFTC website. This is where all the magic begins. Head over to the CFTC's website. It's the official source for COT data. They have a dedicated section for the COT report. This is where you'll find all the reports you need. Look for commitments of traders or something similar. It's usually easy to spot. Step 2. Select the right report. This step is crucial for getting the correct data. You'll see different reports available. Each one serves a different purpose. For our purposes, we want the disaggregated report. This report provides a detailed breakdown. This one breaks down the data by trader type, which is what we need for a thorough analysis. Step 3. Choose your market. This is where you specify the market you're interested in. Next, select the market you're interested in. There are various options to choose from. You can find Forex data under Futures Only, and indices under Futures and Options combined. Make sure to choose the right one. Step 4. Download the data. This is where you get the raw data. Once you've selected your market, download the data in CSV format. This format is versatile and easy to use. This format is easily importable into Excel. It makes data manipulation straightforward. Step 5, import into Excel. This is where we start working with the data. Open a new Excel spreadsheet and go to Data. From Text CSV, this is the import function. Select the downloaded CSV file and follow the import wizard. It's a simple process. Make sure to choose comma as the delimiter. This ensures the data is correctly formatted. Congratulations, you now have COT data at your fingertips. You're ready to dive into analysis. In the next section, we'll learn how to make sense of all these numbers. Stay tuned for some exciting insights. Section 5. Understanding COT data, open interest, and non-commercial positioning. Now that you have the COT data in Excel, let's break down what it all means. This data can be a gold mine of information if you know how to interpret it correctly. Don't worry, it's not as complicated as it looks. With a bit of practice, you'll be able to read these numbers like a pro. Open interest. This tells you the total number of outstanding contracts in a particular market. It's a crucial metric for understanding market activity. Rising open interest usually suggests increasing interest in that market, which could mean a stronger trend. Conversely, falling open interest might indicate a weakening trend. Non-commercial traders. These are the big dogs we've been talking about, hedge funds, institutional investors, etc. They have significant capital and resources. They're in it for the big bucks and often drive market trends. Their actions can create ripples that affect the entire market. Pay close attention to their net positioning. Longs minus shorts. This can give you a sense of their market sentiment. Commercial traders. These are typically businesses that use the futures market for hedging purposes. They aim to protect themselves against price fluctuations. They tend to be more risk-averse and often take positions opposite to the non-commercials. Their strategies are usually more conservative. Small traders. This group includes individual investors like you and me. While they may not have the same influence as larger players, they are still important. While their impact on the market is smaller, their positioning can still provide insights into overall sentiment. They often follow trends set by larger traders. By analyzing the positioning of these different trader groups, particularly the non-commercials, you can gain valuable insights into potential market movements. This can help you make more informed trading decisions. Section 6. Practical example. Using COT data to trade the EUR-USD. Let's look at a practical example of how to use COT data to trade the EUR-USD currency pair. Say you've been following the euro and notice that it's been in a downtrend against the US dollar. You open your COT data for the EUR-USD and see that non-commercial traders have been steadily increasing their net short positions. This tells you that the smart money is betting on the euro to continue weakening against the dollar. Based on this information, you might consider entering a short position on the EUR-USD, aligning yourself with the sentiment of the larger, more informed traders. Of course, you'd still use your usual technical and fundamental analysis to confirm your trade entry and exit points. Remember, COT data is just one piece of the puzzle, but when used correctly, it can give you that extra edge to make more informed trading decisions. Section 7. Analyzing COT data, spotting trends and reversals. Now that you understand the basics of COT data, let's talk about how to use it to identify potential trends and reversals. One popular method is to look for extremes in positioning. For example, if you see non-commercial traders holding an extremely bullish position, high net longs, in a market that's already gone up significantly, it could be a sign that the trend is overextended and due for a pullback. Conversely, if non-commercials are extremely bearish, high net shorts, in a market that's been in a prolonged downtrend, it could indicate a potential bottom and a possible reversal to the upside. Another technique is to look for divergences between price action and COT data. For instance, if a market is making new highs but non-commercial long positions are decreasing, it could signal weakening momentum and a potential trend reversal. By learning to read these signals in the COT data, you can anticipate market moves and position yourself for potentially profitable trades. Section 8, COT data limitations, what you need to know. While COT data can be a powerful tool, it's important to remember that it's not a crystal ball. There are limitations to consider. First, it's a lagging indicator. COT data is released weekly, which means it reflects the positioning of traders at the close of the previous Tuesday. Therefore, it's a lagging indicator, and market conditions may have changed since then. Second, it's not a standalone tool. COT data should be used in conjunction with other forms of analysis, such as technical and fundamental analysis. Relying solely on COT data can be risky. And third, it's subject to interpretation. Different traders may interpret COT data differently. What one trader sees as a bullish signal, another might view as bearish. It's essential to develop your own understanding and interpretation of the data. By being aware of these limitations, you can avoid common pitfalls and use COT data more effectively in your trading. Section 9. Level up your trading mastering COT data for consistent profits. Congratulations! You've now embarked on the exciting journey of mastering COT data. By incorporating this powerful tool into your trading arsenal, you've gained a significant advantage over traders who rely solely on traditional methods. Remember, the key to success with COT data, like any trading strategy, is practice and consistency. Take the time to study historical data, identify patterns, and backtest your strategies. As you become more comfortable with COT data, you can explore more advanced techniques, such as combining it with other indicators, sentiment analysis, and intermarket analysis. The world of trading is constantly evolving, but by embracing tools like the COT report and continuously learning, you can stay ahead of the curve and achieve your financial goals. So keep learning, keep practicing, and never stop seeking an edge in the markets.